The dollar's going down. The dollar's going down. 10% is nothing. They need the dollar way lower. They need to let inflation run hot. I am bullish Bitcoin above everything, but I also think gold will go up. I also think stocks will go up. Again, not in gold terms, especially not in Bitcoin terms, but I also think inflation's coming back. Inflation is coming back. I would expect inflation in 2026, maybe in the first half. And when I say, so the stock market is going to get obliterated. You say, bro, no, it's not. The stock market keeps going up. In dollar terms, it keeps going up, but I guarantee you it's going to get smoked in Bitcoin terms. It's going to get smoked in gold terms. In fact, it already is. Over the last 5 years, stock market's down 85% against Bitcoin, and we're just getting started. I guarantee you the Bitcoin smokes the Mag 7 over the next few years. Absolutely demolishes it. Because this money's leaving.
Jack Mallers opens by discussing a profound shift in global finance that kicked into high gear with Trump's America First trade policy. Enacted in February, this policy effectively told China to remove its capital from U.S. markets. The implications are massive. China's $1.3 trillion sovereign wealth fund is pulling out, and that capital flight is shaking the very foundations of America's monetary dominance. The consequences are already evident. Stocks are down. Bonds are down.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The America First trade policy that Trump implemented in February basically said, in more or less words, China, get your money out of the country. Now, China has said, okay, look at this headline. $1.3 trillion wealth fund. Okay, we're out. What happens? Dollar down, stocks down, bonds down. Dollar down, stocks down, bonds down means money's leaving America. Stocks down, but bonds up. That means money's going from risk on to risk off, right? Everything down, that means foreign trade surpluses that have funded American exceptionalism over the years are saying, okay, this monetary regime is over. We get it. Goodbye. We're going to buy gold. We're going to buy Bitcoin. All you need to do is look at a chart to see that I'm not making this up. This is literally factual representation of what's been going on. And when I say, so the stock market is going to get obliterated, you say, bro, no, it's not. The stock market keeps going up. In dollar terms, it keeps going up, but I guarantee you it's going to get smoked in Bitcoin terms. It's going to get smoked in gold terms. In fact, it already is. Over the last 5 years, stock market's down 85% against Bitcoin, and we're just getting started. I guarantee you the Bitcoin smokes the Mag 7 over the next few years. Absolutely demolishes it. Because this money's leaving. And I've been saying it on the show over and over and over and over and over again. Those of you that are frequent weekly listeners know that I have. The money's leaving America. Global neutral reserve assets are the future of our world. No one should be responsible for printing and managing the time and energy and collective effort of humanity. We need to be governed by Mother Nature. That's where we belong. That's what proof of work is all about. So this capital's leaving. Now, this is what I thought was hilarious. The world is starting to price in the reality that we are having a hawkish Fed with Jerome, and they're going to pivot to very dovish. We're going to go from very hard monetary policy to high rates to very weak monetary policy and low rates. So what the markets are pricing in already is that shit is about to go down. It's about to get weird. It's about to get weird. So I think this is fascinating. This whole Fed bout is interesting. I've said, we're living in some form of fiscal dominance already. So in many respects, in my opinion, the Fed rate doesn't matter too much, but the dollar's going down. The dollar's going down. 10% is nothing. They need the dollar way lower. They need to let inflation run hot. I am bullish Bitcoin above everything, but I also think gold will go up. I also think stocks will go up. Again, not in gold terms, especially not in Bitcoin terms, but I also think inflation's coming back. Inflation is coming back. I would expect inflation in 2026, maybe in the first half. Yeah. Powell is the last hawk standing, as they say. And 2026, the market is already pricing in his replacement and the fact that they're going to slash and slash and slash and slash rates. The regime shift is well underway. And listen, if this is any forward indicator, because here's the thing, you don't really know how markets in the world are going to interpret things. If what the world is saying is war's off the table, which means, risk can be, very much on. Risk on, easy monetary policy coming, and we'll get to a few more Trump screenshots. This is very, 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 very bullish Bitcoin. Very, very bullish Bitcoin, which transitions me into next. The biggest growth for Tether is the Bitcoin price. People don't understand that. Tether grows when Bitcoin grows. Pull up a chart and look at it. The reason is because Tether has more liquid trading volume than Bitcoin on some days. The USDT BTC trading pair is like the most liquid trading pair in the world because USDT is the trading pair for all other markets outside the US. And in many cases, it's the trading pair inside the US. I think it's like 10% of Coinbase's volume alone. So if Bitcoin goes from a $2 trillion market cap to a $10 trillion market cap, Tether's going to grow proportionately. Do you understand that? And so it is my interpretation that Trump is saying Bitcoin takes pressure off the dollar because, first of all, as Bitcoin grows, the dollar weakens. You need to weaken the dollar against something. We've talked about this on that on this show. The dollar has to weaken against something. It's not going to be able to weaken against the Chinese yuan. It's not going to be able to weaken much against the euro. All currencies weaken with the dollar. And if the dollar is going to remain the world reserve currency, it's going to have this artificial strength. So there has to be an escape valve. It's going to be gold and Bitcoin, in my opinion. Just because Bitcoin isn't quite yet, it doesn't have the muscular skeleton to be purchased by central banks yet. Central banks have been buying tons and tons and tons of gold. Bitcoin's just not there yet. Bitcoin will end up demonetizing gold over a longer time frame. I'm talking about in the next 12 to 24 months. But I think the United States, listen, they have two bills on their desk. One is the Genius Act, the stablecoin bill. The other is the Bitcoin Act. If the U.S. passes the Genius Act, which it looks like they're about to do, and then passes the Bitcoin Act, they send Bitcoin to being worth tens of trillions of dollars, and they send stablecoin to be worth trillions of dollars. That's just my interpretation. That's my interpretation. He says Bitcoin takes pressure off the dollar. It allows the dollar to weaken against something, and it allows the United States to grow a neutral reserve asset while finding someone to finance their deficits and buy their debt. If you go back to this, if rates come all the way down to, let's say, 0, and stablecoins have to buy US debt, they're basically finding lenders at 0%. So what Trump wants is he wants the rates low. Now, I don't think they're going to bring the rates to 0. Call them 2%. So Trump finds $3.7 trillion according to Bassett, and this number just keeps going up. So this is just at face value, I'm about to print $3.7 trillion worth of money. By the way, what do you mean a reporting of a project? What does that even mean? Recent report. You're the report, bro. It was initially $1 trillion, then $2 trillion, now $3.7 trillion. So it is my opinion, the Genius Act and then the Bitcoin Act, you pass them both. Bitcoin goes to the moon, Bitcoin goes to the moon, stablecoins go to the moon, stablecoin go to the moon. You have trillions and trillions and trillions and trillions of dollars that you get to lend out short term, front end of the curve at effectively nothing.
The pattern is clear. Sovereigns are rotating out. Wall Street is rotating into retail, and the assets being passed along, tech stocks trading at 150x earnings, over-leveraged credit funds, and dollar-denominated debt are dangerously overvalued. Mallers paints a grim picture of retail bag holders stuck in illiquid vehicles, convinced of their prestige simply because they come from Goldman Sachs. But the reality? These assets are losing purchasing power rapidly against Bitcoin and gold. They are the suckers at the poker table, and they don't even know it.
Okay, if China is no longer bag holders of Wall Street, who are the bag holders? Look at this. Retail investors. Oh my God, man. You just cannot make it up. Retail money is now 14% of private credit market, up from 1% a decade ago. By the way, a decade ago, when did I say China stopped buying US Treasuries? When did China start rotating out of the United States as the world reserve currency? This is not a yesterday thing. This is not a last month thing. This is not a last year thing. They started in 2014. So this is a very notable chart. In 2014, retail investors were only 1%. How do you rotate out the biggest sovereign in the world that's effectively the world's factory and find new bag holders? Well, you just dump on retail. And all of us should be familiar with this because of shit coins. We're very familiar with the story, but unbelievable pedigree from Wall Street. Hey, you wouldn't expect anything less. Just found it funny. I mean, look at this headline. Private funds for retail investors jumped to $350 billion. So the growth for these funds to find new bag holders, listen, if China needs to sell illiquid stuff, they need buyers or else you're going to have a crisis. There isn't liquidity in a lot of these funds. And so how do you get liquidity? Go raise the money from retail. So listen, and I mean, going back to this tweet, retail money now 14% of the credit market, up from 1% a decade ago when the world was like, after 2008, the world was like, screw this. This system's ridiculous. I'm out. Illiquid assets funded by investors who think they have liquidity. So if I were to draw an absolute doomsday scenario for retail investors, is they're sitting in dollars, they're sitting in extremely illiquid opportunities that they think are prestigious because Goldman Sachs is giving it to them. In fact, they're on the other side of China rotating out of these assets that are priced ridiculously. I mean, no tech stock should be trading at 150 times earnings. A lot of these assets are, like I said, artificially inflated because of the dollar's reserve status. The dollar has artificial demand. What's the artificial demand? Everyone has to use it because it's a world reserve currency. If we rotated back to a gold standard, to a Bitcoin standard, the dollar wouldn't have artificial strength. These assets wouldn't have artificial demand. So if you're going to hand all these assets to retail and not give them any liquidity and have them sit in dollars and have them sit in their 60-40 portfolios, they're going to get murdered. They're the suckers at the poker table.
He cautions that many of these prestigious investments will underperform dramatically in the coming Bitcoin standard world. If you're not holding sound money, you're holding melting ice cubes. The smart capital, sovereigns, funds, and high net worth individuals is rotating into Bitcoin. The rest, they're being left behind. Mallers concludes with a sobering truth. While some may gamble on leveraged plays, speculative funds, or overvalued stocks, the best trade remains simple. Hold Bitcoin. Please like and subscribe.